Hi, it's Robert. Today I am going to show you how to use MS Excel to create and maintain a simple spreadsheet-based accounting information system, or AIS. You will need the knowledge you gained in the basic and advanced Excel topics to be able to fully understand and duplicate processes described in this presentation. Also, by necessity, I will have to present an introduction to AIS. The topics of this presentation starts with the rationale why we can refer to accounting as an information system, or AIS. Then we will look at the three components of AIS. After that, we will be looking at how AIS is distinguished from MIS, or Management Information System. Next, we will then go into the details of the three stages of or the major processes within the accounting information system. After that, we will have a look at the objectives of AIS before we go into the presentation of the Excel-based AIS that I have developed for this presentation. And so we're off to our first topic and the next slide. As was discussed in your basic accounting subject, one characteristic of accounting is that it is an information system. By system, we mean that there are several components working interdependently, following a predefined process that includes specific tasks progressing toward the common goal or the attainment of the common goal of the components, none other than to provide the financial information needed by management to make important economic decisions. AIS is usually surrounded by subsystems or small segments of it that processes financial and non-financial transactions that directly affect the processing of financial transactions. For example, updates to the chart of accounts are infrequently made to keep the list current. Although not technically a financial transaction, these changes provide vital information for processing future financial transactions. The AIS is composed of three major subsystems, namely, one, the Transaction Processing Systems, or TPS, which supports daily business operations with numerous reports, documents, and messages for users that can be seen on their monitor throughout the organization. Two, the General Ledger Financial Reporting Systems, or the GL/FRS, which produces the traditional financial statements, such as the income statement, balance sheet, statement of cash flows, tax returns, and other report requirements by law. And three, the Management Reporting System, or MRS, which provides internal management with special purpose financial reports and information needed for decision making, such as budgets, variance reports, which is a comparison of the actual budget and the actual spending, and responsibility reports. In your other subjects, you must have heard of the Management Information System, or MIS. Management often requires information that goes beyond the capability of AIS. As organizations grow in size and complexity, specialized financial areas emerge, requiring additional information for production planning and control, sales forecasting, inventory, warehouse planning, market research, and so on and so forth. The MIS processes non-financial transactions that are not normally processed by traditional AIS. These transactions include, but are not limited to, capital budgeting systems, market analysis, deliveries, scheduling, job skill tracking, and etc. Why is it important to distinguish between AIS and MIS? Because of the highly integrative nature of modern information systems, management and auditors need a conceptual view of the information system that distinguishes key processes and areas of risk and legal responsibility from the other non-legal binding aspects of the system. For example, AIS must be distinguished from MIS to identify a boundary of the PFRS, Sarbanes-Oxley, SEC or BIR requirements, and so the scope of AIS is related to these areas only, and the responsibilities of the management are bound within the boundaries of this information system. As you will learn in your AIS subject in the next semester, the basic model of any information system, including AIS, is composed of three major stages, or it's also called three major processes within the AIS. Namely, we have the data collection, and then we have the data processing, and the last one is information generation. As to data collection, the task of this stage is to collect data from various sources, primarily the TPS or the transaction processing systems. TPS is a type of system that is most widely used in an organization because it is designed to accommodate the day-to-day transactions of the business. It is built to be robust, highly reliable, highly available, and user-friendly. The main purpose of the data collection stage is to ensure that event data entering the systems are valid and free from material errors. In many respects, this is the most important stage in the system. Should transaction errors pass through data collection undetected, the system may process the errors and generate erroneous and unreliable output. This in turn could lead to incorrect actions and poor decisions by the users. Two rules govern the design of data collection procedures: relevance and efficiency. The information system should capture only relevant data. A fundamental task of the system designer is to determine what is and what is not relevant. He or she does that by analyzing the user needs. Only data that ultimately contribute to information are considered relevant. The data collection stages should be designed to filter irrelevant facts from the system. Efficient data collection procedures are designed to collect data only once. This data can then be made available to multiple users. Capturing the same data more than once leads to data redundancy and inconsistency. Information systems have limited collection, processing, and data storage capacity. Data redundancy overloads facilities and reduces the overall efficiency of the system. Inconsistency among redundant data elements can result in inappropriate actions and bad decisions. At this point, it is appropriate to distinguish data from information. Data are facts, which may or may not be processed. When processed, we mean edited, summarized, or refined, and have no direct effect on the user. By contrast, information causes the user to take an action that he or she otherwise could not or would not have taken. Information is often defined simply as processed data. However, this is an inadequate definition. Information is determined by the effect it has on the user, not by its physical form. For example, a purchasing agent receives a daily report listing raw materials inventory items that are at low levels. This report causes the agent to place orders for more inventory. The facts in this report have information content for the purchasing agent. However, the level of the inventory report in the hands of the personnel manager is a mere collection of facts or data, causing no action and having no information content. We can see from this example that one person's information is another person's data. This information is not just a set of processed facts arranged in formal report. Information allows user to take action to resolve conflicts, reduce uncertainty, and make decisions. We should note that action does not necessarily mean a physical act. For instance, a purchasing agent who receives a report showing that inventory levels are adequate will respond by ordering nothing. The agent's action to do nothing is a conscious decision triggered by information and different from doing nothing because of being misinformed. The distinction between data and information has pervasive implications for the study of information systems. If output from the information system fails to cause users to act, the system serves no purpose and has failed in its primary objective. Let's go back to our discussion of the three stages of information systems. The second operational stage of the information system is data processing. Once collected, data is processed. Again, processing means editing, summarizing, or refining to produce information. Tasks in the data processing stage range from simple to complex, depending on how the system was designed. Examples include mathematical algorithms such as linear programming models used for production scheduling applications, statistical techniques for sales forecasting, and posting and summarizing procedures for accounting applications. An important task related to data processing is database management. The organization's database is its physical repository for financial and non-financial data. We use the term database in the generic sense. It can be a filing cabinet or a computer disk. Regardless of the database's physical form, we can represent its content in a logical hierarchy. On the next slide, you can see that the levels in the data hierarchy: attribute, record, and file in both physical and electronic format. The data attribute is the most elemental piece of potentially useful data in the database. An attribute is a logical and relevant characteristic of an entity about which the firm captures data. The attributes shown on the slide are logical because they all relate sensibly to a common entity, that is, customer information. The attributes in both physical and electronic data are customer number, name, address, and credit limit. Each attribute is also relevant because it contributes to the information content of the entire set. As proof of this, the absence of any single relevant attribute diminishes or destroys the information content of the set. The addition of irrelevant or illogical data would not enhance the information content of the set. Record. A record is a complete set of attributes for a single occurrence within an entity class. For example, a particular customer in the sample on the slide has customer number, name, address, and credit limit. This complete set is one occurrence or one record within the class. To find a particular record within the database, we must be able to identify it uniquely. Therefore, every record in the database must be unique in at least one attribute. This unique identifier attribute is the primary key. Because no natural attribute such as the customer name can guarantee uniqueness, we typically assign artificial keys to records. In our example, the artificial key for the customer information is the customer number. File. A file is a complete set of records of an identical class. In our example, a complete set of customer records. Similarly, files are constructed for other classes of records such as accounts receivable, inventory, accounts payable, and payroll. The organization's database is the entire collection of such files. Database management as part of the data processing stage involves three fundamental tasks. 1. Storage, 2. Retrieval, and 3. Deletion. The storage task assigns keys to new records and stores them in their proper location in the database. Retrieval is the task of locating and extracting an existing record from the database for processing. After processing is completed, the storage task restores the updated record to its place in the database. Deletion is the task of permanently removing obsolete or redundant records from the database. The third stage in the basic information system model is information generation. This is the process of compiling, arranging, formatting, and presenting information to users. Information can be an operational document such as a sales order, a structured report, or a message on a computer screen. Regardless of physical form, useful information has the following characteristics: relevance, timeliness, accuracy, completeness, and summarization. Relevance requires that the contents of a report or document must serve a purpose. This could be to support a manager's decision or a clerk's task. We have established that only data relevant to a user's action have information content. Therefore, the information system should present only relevant data in its reports. Reports containing irrelevancies waste resources and may be counterproductive to the user. Irrelevancies detract attention from the true message of the report and may result in incorrect decisions or actions. Timeliness dictates that the age of information is a critical factor in determining its usefulness. Information must be no older than the time of the action it supports. For example, if a manager makes decisions daily to purchase inventory from a supplier based on an inventory status report, then the information in the report should be no more than a day old. Accuracy requires that information must be free from material errors. However, materiality is a difficult concept to quantify. It has no absolute value. It is a problem-specific concept. This means that in some cases, information must be perfectly accurate. In other instances, the level of accuracy may be lower. Material error exists when the amount of inaccuracy in information causes the user to make poor decisions or to fail to make necessary decisions. We sometimes must sacrifice absolute accuracy to obtain timely information. Often, perfect information is not available within the user's decision time frame. Therefore, in providing information, system designers seek a balance between information that is as accurate as possible yet timely enough to be useful. Completeness means that no piece of information essential to a decision or task should be missing. For example, a report should provide all necessary calculations and present its message clearly and unambiguously. Summarization is aggregation in accordance with the user's needs. Lower level managers tend to need information that is highly detailed. As information flows upward through the organization to top management, it becomes more summarized. Feedback is a form of output that is sent back to the system as a source of data. Feedback may be internal or external and is used to initiate or alter a process. For example, an inventory status report signals the inventory control clerk that items of inventory have fallen to or below their minimum allowable levels. Internal feedback from the information will initiate the inventory ordering process to replenish the inventories. Similarly, external feedback about the level of uncollected customer accounts can be used to adjust the organization's credit policies. Information system objectives. Each organization must tailor its information system to the needs of its users. Therefore, specific information system objectives may differ from firm to firm. However, three fundamental objectives are common to all systems. Number one, to support the stewardship function of management. Stewardship refers to management's responsibility to properly manage and utilize the resources of the firm. The information system provides information about resource utilization to external users via traditional financial statements and other mandated reports. Internally, management receives stewardship information from various responsibility reports. Number two, to support management decision making. The information system supplies managers with the information they need to carry out their decision making responsibilities. And number three, to support the firm's day to day operations. The information system provides information to operational personnel to assist them in the efficient and effective discharge of their daily tasks. Now we switch to the video presentation of the Excel-based AIS using the files I uploaded to my Google Drive. I have made the presentation and the files as simple as possible for you to be able to easily understand the concept and grasp the implications of the processes that we are going to perform. It will benefit you greatly if you have downloaded the files and do as I do in the video. The link to files in my Google Drive is posted on the FB group. If you have not downloaded it yet, pause the video and download the files. Because some of the actions are performed are quite fast, you may opt to slow down the video speed or pause the video at the appropriate place to give you time to catch up with my presentation. First, check if you have all the files in the same folder. You should have the following files as shown on the screen. You must have A1 MS Excel Workbook, which is the file with the name Excel-Based AIS or Excel-Based AIS shared. B, you must have also 9 CSV or comma separated variable files, which we will use to simulate the various sources of data from or the TPS sources to be imported into the Excel-based AIS. And C, one PNG file simulating a journal voucher from the HR department representing the payroll for the month. Now, please open the Excel-based AIS workbook. You will find several worksheets when you open the workbook. Notice that there are 8 worksheets. Well, the first worksheet is COA. You can find list of accounts that are fictitious company, which we will call by the sophisticated name Regalas Buy and Sell. The COA is one of the reference files that is maintained by what we mentioned earlier, the AIS subsystems, which help to ensure that the system parameters, when we say system parameters, these are the rules, company rules that were built into the system, which makes the AIS process the transactions accurately. This AIS subsystem of COA helps to ensure that the system parameter, which is the COA itself, are updated. The attributes of the COA parameter file worthy of note are, we have first the account offset. Account offset is the default offset account used when no other account was specified by the source TPS. However, in our presentation, we will assume that all the source systems used the correct specific offset account. And the second one is the account BAL. This is the account normal balance. If 1, it means that the normal balance is debit. If -1, it means that the normal account is credit. We will use these parameters when we will be summarizing the current transactions from the source TPS. The second worksheet is BS BEG, which is short for balance sheet beginning. It contains amounts from the previous month's balance sheet as of the end of December 2020. We will use the beginning balance of the accounts to compute for the ending balance once we have processed the current transactions. The third worksheet is current. As you will notice, this worksheet does not contain any records at all, not yet. This worksheet is a simulation of the data from the TPS source systems of the transaction processing systems. In our case, data will come from the various CSV files that we noted earlier. I will show you how to import the data from the 9 sources in a while. Notice also some text to the right of the data range alerting you to an important system parameter, which is the maximum number of records allowed to be processed by the Excel workbook. Currently, it is set at 1,000 records. If you will check cell ID A1002, you will notice that it indicates the end of the file with the words EOF. If you imported more than 1,000 records, you will overwrite the content of this cell, and the worksheet will alert you that the maximum number of records have been breached with the words warning, end of file reached. The conditional message is defined using the function if, and the formatting changes to red using the conditional formatting feature. The only attribute that contains data in this current transaction file is the cur sequence, which is the assigned sequence number to the data that we will be importing. All other attributes will be populated from the CSV files. Current source represents the name of the TPS, where the data conceptually comes from. Cur key is the unique identification number of the transactions generated by the TPS when the transaction was being committed into the system. Cur SDoc and Cur RDoc are the source and reference or turnaround documents that support the transactions. Cur Desk is a short description of the transaction. Also, this is supplied by the source TPS. Cur Amount is the amount of the transaction based on the source document. Cur DR is the account code for the debit entry, and Cur CR is the account code for the credit entry. Again, we will assume that all transactions from the source TPSs will be supplying the correct debit and credit account codes. The fourth worksheet is summary. This worksheet is a simulation of the manual ledger, and it contains the following. 1. Account ID. It is the account code copied from the COA worksheet. 2. Account NB, the normal balance indicator. Again, if 1, it is debit, and if -1, it is credit. The VLOOKUP function is used to get the value from the COA file or worksheet using the account ID as the lookup value. Number 3, account BEG is the beginning balance from the last period. For balance sheet accounts, this will be the balances from the December 31, 2020 balance sheet. For income statement accounts, the balances will all be 0, as all transactions of income statement accounts are close to the income summary account and to the capital account. Number 4, account TDR and account TCR. This stands for total debits and total credits. Using the SUMIFs function, the total debit and credit amounts from the current worksheet are calculated using these fields or columns. Notice that the sum range and the criteria range arguments are set to include all records up to the end of file. If the current transaction has less than 1,000 records, the total debits and credits will still be accurate. However, if the current transactions has more than 1,000 records, the total of these columns will be inaccurate and the warning message on the current worksheet will appear. Number 5, account end. It is the ending balance of each account after considering the beginning balance and the total debits and total credits from the current worksheet. It uses the if function to calculate the right balance, considering whether the normal balance of the account is debit or credit, as indicated by the account NB field. At the bottom of the worksheet, you will find what we call control hash totals of debits and credits for the beginning balance, total debits, total credits, and ending balance fields. These are calculated using the SUMIFs function for the beginning and ending balances, and the simple sum function for the total debits and total credits. The purpose of these calculations is to ascertain the accuracy of the debit and credit amounts. If the debits and credits balance, it indicates that the current transactions as well as the beginning and ending balances are accurate. However, this control hash totals, if they do not balance, there is a problem either with the formula or the data imported into the current worksheet. The fifth worksheet is the WS worksheet. WS simply means worksheet. or it represents the counterpart paper's columnar worksheet you used in basic accounting when performing the end of period task of number 1, preparing the trial balance, 2, including adjustments of prepaid accounts to bring them from their book balances to their actual balances, number 3, computing for the adjusted balances in the adjusted trial balance columns, and from the adjusted trial balance, number 4, extending the amounts that go into the income statement and balance sheet debits and credit columns. Under the adjustments column, you will see letters A through I for some balance sheet accounts. These indicate that the account needs to be adjusted for the amount of expense for the current period. The amounts will be automatically updated into the cells of the expense counterpart accounts. Since the cells of the balance sheet accounts that need to be adjusted are referenced by the cells in the income and statement accounts. These are the cells with the green background. Now, if you turn your attention to the income statement columns, you will find that the balance of account 140 or inventory had been extended under the debit column. This is because the beginning inventory balance will be used to compute for the cost of sales amount in the income statement. The inventory balance is the first amount that we can extend. Further down the rows, you will also notice a highlighted cell in orange background. This cell will hold the amount for the account ID 819 inventory end. Note that the inventory ending balance does not appear in the balance sheet since the amount of this account will be transferred as the beginning balance of the resultant balance sheet. And that is why we also have an orange highlighted cell under the debit column of the balance sheet. In actual situations, the amount of the ending inventory may be determined by taking physical count of the inventory or computing its book value by using the inventory beginning, purchases, and sales data. In our example, we will use a hypothetical ending inventory amount based on a similarly hypothetical physical count. Right at the bottom of the worksheet, you can find the account ID 600, or it is the income summary account. The difference between the debit and credit columns of the income statement will determine its value. The amount is transferred to the balance sheet column to form part of the ending balance of account 510 Capital Regala account. Note also that even if we don't have the current transactions imported yet, all the debit and credit are corresponding in balance. The AIS, SC, and BS end worksheets are the formal financial statements whose values are derived from the worksheet or from the WS worksheet. You can use the SUMIF or VLOOKUP functions to locate for the value in appropriate columns of the worksheet. However, I used the simple, straightforward cell referencing formula in this case to show you how simple Excel formulas can replace a tedious manual work. Preparing the month-end financial statements. At this point, we assume that it is now the end of January 2021 and we need to prepare the monthly income statements. I am using the MS Office 2016 version, so I suggest that you use the same version so that you can follow accurately, especially on the options to click. First thing we will do is to import the transactions from the different data sources. Importing the current transactions. You first go to the current worksheet. Number 2, position the cursor at cell B2. And then number 3, click on data, get external data from text. In the import text file dialog, find the folder where you saved the CSV files. Choose one file. It doesn't matter which one you import first. And click import. The text import wizard will appear. You will notice that the data we are importing is different in row 1. That is so because the first record in row 1 is the header information. Headers and batch control data that are read by systems to prevent duplications of file processing and assure completeness by accounting for the sequence of the files. In large business entities that process huge volumes of transactions, transactions are grouped in batches depending on the number of transactions or the length of time passed. This is called batch processing. Thus, they divide the transactions into chunks and save each chunk as a file called a batch. Sometimes batch files also contain footer information to include other processing controls. Our transaction files do not have footers. In our simulation, we don't need to process the headers of each file, so we will just ignore them. On the Set Import at Row option, put number 2, so that importing will not include the first record, the header. Then click Next for step 2 of the text import wizard. The delimiter is set to tab. However, our transaction files are delimited with commas. So we uncheck tab and check comma. Note how changing the type affects the data presentation. Note also the header is handled differently by the import wizard, treating it as just one long string of text on a single field. Then click Next again for step 3 of the text import wizard. We don't need to change anything here. Excel just imports all data, assigning them with a general type, which converts numeric values to numbers, date values to dates, and all remaining values to text. Just as what we want to Excel to do, so we just click on Finish. The next dialog box asks you if you want to import the data starting at the cell where your cursor is currently in position at cell ID B2. Note how Excel has ignored the header information and starting the import from the second record of the file. At this point, do not save the file. If you want to save anyway, be sure to save it with another file name. Do the same import process for the rest of the current transaction files. Remember to import all 9 CSV files. Remember also to always start the import from record number 2. After you have finished importing them all, you should have imported 876 records. Check your data if there is something suspicious that might have been caused by the import process. If nothing seems to be out of the ordinary, you may save the file using a different file name. Whenever you do something wrong during the import process, close the Excel file and then open the original file and start all over again. After you have correctly imported the current transactions from the different source TPSs, open the payroll 21-01.png file, which is a simulation of a journal voucher coming from the HR department. Add the transaction to the current worksheet. Go and check the summary worksheet. The total debits and credits at the bottom show that all transactions are recorded. Again, this does not tell us that we have used the correct account codes. And now you have the ending balance needed for the trial balance and other columns in the WS worksheet. You can go and check the effect of importing the current transactions in the other worksheets. Note how the values in the cells previously blank are updated. Note also that the financial statements are now almost complete, but not yet. We still have the adjustments and the ending inventory to deal with. Next, we go to the WS worksheet. We now make the end of period adjustment as follows. Number 1, go to cell H11. Assuming that the prepaid rent is good for 1 year and we have used the January portion, we input the formula to compute for the expired portion, which is the amount divided by 12. Number 2, we do the same for the other prepaid accounts, assuming that they too are all good for 12 months. Number 3, for the depreciation expense related to non-current assets, we assume that the net book value as of December 31, 2020 is still good for 5 years and write the formula for these accounts just so. As for the customer deposits, let us assume that of the total 125,448 reserved amount for items from the online store, 65,500 have already been shipped to the customer. So we reduce the balance by the same amount. And inputting the ending balance ending inventory balance. As for the ending inventory, let us assume that we took an inventory and established that the balance is 125,460. So we put that amount here on the credit side, and the same amount is updated as the ending inventory in the balance sheet area. Since the formula in this cell is a reference to the amount in the income statement area. After all the necessary adjustments have been input in the appropriate places, we see that the net income for the month is 88,179.98. Not bad. It is approximately 6% of the total sales. You can see that the income statement is already updated with the figures from the worksheet and calculates the same net income. That income is updated into the statement of changes in equity as an addition to the beginning capital balance, which is reduced by a drawing amounting to 25,500, the transaction coming from the check disbursement transaction processing system, to put the ending balance at 720,094.65. This figure is carried over to the balance sheet. Our simple Excel-based AIS is now up to date as of January 31, 2021. For the month of February, we will move the balances of the BS end sheet to the BS beg sheet and do the process all over again. You may now save your work. You can now use the skills you acquired in our MS Word topics to write a narrative report of this month's results of operations and financial position. And when you are called in a boardroom meeting to discuss your report, you may also use the skills you acquired in our MS PowerPoint topics to create and present a professional-looking PowerPoint presentation. And there it is, our simple Excel-based AIS using the Excel formulas and functions. I hope you followed with the simulations so you can appreciate the power of MS Excel. You may study the workbook, understand how the data are connected across the worksheets to help you with the financial statement preparation. Once you get the hang of it, you can even use the principles applied here to make your own Excel-based AIS. Thank you for your time and stay safe always.